All right, so here's a weekly update of my portfolio with Questrade. So my total equity as of December 31st is 105,736. So it actually dropped from last week. And now if we go into the details, into all the different accounts I have with Questrade, so I've got a margin account, TFSA, RRSP, and RESP. And look at that, I get an event here, dividends. Bank of Nova Scotia is paying dividend January 4th, or probably ex-dividend date is January 4th. So if I look into my RSP account first, so my total size here, I've got cash 1,300 Canadian, 19,000 US. Market value is, I guess, is the equities that I'm holding. So 7,000 in equities. If I go under positions here, you can see that I've got 4 different stocks, but they're all covered calls. So I know I made a video talking about my 2020 investment strategy. I completely went off the strategy. I said I would never do covered calls on individual stocks, but I used to do on the ETFs, correct? But if I look at IWM, in my RSP, I used to have IWM, but it's very hard to buy a stock when it's at all-time highs, or an ETF that's at all-time highs. If we look at, let's say, the 1-year chart, it's hard for me to buy 100 shares of an ETF that's at all-time highs. I have no idea what the market's going to do, if it's going to continue up, if it's going to come back down, no idea, but it doesn't feel comfortable buying something at all-time highs and 100 shares of it at the same time. So what I'm doing instead is I'm putting in $2,000 max per covered call trade. So I bought Box, for example. This one I only spent less than $18, so $1,800 to buy 100 shares. And I'm just basically doing covered calls as much as I can, squeezing out as much premiums as possible. So this one, for instance, if I go to orders executed, I entered at $1,680, but my max selling price is $18. So that gives me a return in about, I think, a little bit less than 2 months of 18 divided by 16.8. That's 7% in 2 months. So I'm just trying to squeeze as much premiums as possible from doing covered calls using an investment that's not too crazy. Instead of spending $19,000 on one ETF, I'm spending $2,000 on what is supposed to be a growth stock. So actually Box is supposed to be a growth stock. It might go to $50, $60, who knows, but I'm missing out on all that. I just want to collect the premiums right now because I don't like waiting. I'm an impatient person. I'd rather sell premiums and collect something right now than to hold on and wait for years just to get, not just to get, but to possibly get maybe 100, 200, 300% returns. But that element of unknown or mystery doesn't, I don't like that. So I'd rather collect the premiums up front. It's just my personality. I'm not saying it's the right thing to do, not at all, but it's because I'm impatient. So it comes out in my investment style or investment approach. So I'd rather sell premiums instead of waiting. And I'm doing the same thing with Rocket. I've got a covered call at a 22 strike for February 19. I've been collecting a lot of premiums on Rocket, and luckily it's been dropping or trading in a range between $20 and $22. So in this example, this is a good strategy to sell covered calls because if I did nothing, I'd be down. Instead, I'm collecting premiums every month about. Same thing with Virgin Galactic. It flew. Remember Virgin Galactic? It went, I think, all above 30 or something. Now it came back down to 23, and I've been selling covered calls on it as well. And I've got Wish that I added, I think last week. Yeah, I think last week here, December 28th. I added Wish. It dropped a lot on me after I got in. I got in too early. And I wanted to get in because I thought it would be a stock that would fly. I guess it's not as popular as I thought. Anyway, so it dropped on me, but I went to February 19, collected $3.74 of premium. So my break even is pretty low. I mean, my break even is about $17 or even less. So that's pretty good. I think it's here. Let's go to orders executed. So my Wish, yeah, 1650 is my cost, is my break even. So yeah, so that's my RSP, and I'll just continue doing that with stocks that are trading around $20 so that if anything goes bad, it doesn't hurt my portfolio. Like in March when I think I had 16,000 IWM. I got lucky with IWM. I was able to get out of it by selling out of the money weekly covered calls. I got breached a few times, but I got lucky. The stock came back down again after I rolled it, but it's not going to happen every time. If, for example, with the Qs, I wasn't able to catch up. So when I had covered calls on the Qs in my TFSA at around, I had bought the Qs, I had bought 100 shares at around 232, before the March crash. But then when it dropped all the way down to 160, I'm holding 100 shares at $232. I can't sell call options at 232 because there's no premiums left. So what I was doing is I was selling every week out of the money as possible. So if stock is trading at 170, I would sell, let's say 180, 185 call option for Friday, hoping that the stock doesn't come above my call strike of 180 or 185. Now, at some point I did get breached and I wasn't able to roll and fast enough to catch up to the flying ETF. So I had to sell my shares less than what I actually paid for it. So that's why I don't want to do covered calls on expensive stocks or ETFs, even if there's nothing safer. In my TFSA, I've got all dividend stocks, mostly dividend stocks. I've got Bell, that's down a little bit. Got Bank of Nova Scotia, that's up $266. I put in $1,000 in each, and I'm going in lightly in case they drop some more. I'll put in another 1,000. So I'm dollar cost averaging if I have to. Choice Properties, gold, not a dividend. I just wanted I felt like I had to buy some gold. I had to be involved in some gold. Manulife up $200. MMP up 146. Realty Income. I got Pizza. I've got RioCan. At some point, RioCan was almost $18. It dropped now, but whatever. I'm buying it for the dividend, so I don't care about the price. Smart Centers, I think I added this week. Yeah, December 30th, I added Smart Centers at 23.19. It is commercial properties, but it's got big tenants, so it should be safe. I'm just making an assumption. If I'm wrong, I only put in $1,000 and I'm buying it for the dividends anyways. AT&T, I've got it at 28.38. I'm slightly up. And TD, finally, Canadian Bank here at, I'm up $142. And I'm actually thinking of adding Plaza, I think it's called. Plaza Retail, yeah. I think a subscriber gave this to me. Looks good. It's got a yield of above 7%, so that's good. So I'm going to put in $1,000. And if it drops, then I'm ready to put some more in. But I'll start off lightly with only $1,000. I did want to buy BABA in my TFSA just because it took a big drop the past few weeks. But I got greedy. I wanted to get in at around the lowest point. I want to get in at around 220, and now it's at 232. So I don't know I guess if it stays at 230, I might just buy it at 230, put in $1,000 because it totally got beat up. I think it's it's at a good price compared to its all-time highs. All-time highs of, I think, over 330. Well, let's go see what the all-time highs is. So all-time highs, where's the 52-week high? 319. Yeah. So, and even in March, the low in March was 169, and right now it had a low of 212. So it's not even far from March lows. So I think I put an order to buy in at, I put an order to buy in at 220. I don't think it's going to get filled. I might just change it to 232 next week. We'll see. In my RRSP, I'm still stuck with Intel. Doesn't want to come back up to 56, but as soon as I have a chance to get out at cost, I'm getting out. I don't want to hold it anymore. Although it pays good dividends, but premiums are weak because it's not a volatile stock. So premiums are weak on it. So selling covered calls is not ideal. And dividends are 3% or 2%. And there's no capital appreciation. It's getting destroyed by AMD. So I think as soon as I get a chance to get out, I'm going to get out, and then I'll use the RESP for either I'll do the same thing in my RSP, which is doing covered calls on cheap stocks, or what I'm doing in my TFSA, which would be dividend stocks. The reason I don't want to do covered calls in my TFSA, I want to go light in my TFSA, something stable, is because I use my TFSA as leverage to trade in my margin account. So I sell options in my margin account. So you can see my total equity is $3,000 in my margin account. Yet I'm placing trades that require more equity, and it's basically using my TFSA because it's linked to my margin. So you can see I've got total equity of margin, 2,994. Yet my maintenance excess or my buying power is 30 US and 8 Canadian. Or in total buying power for shares or stocks is combined Canadian is 158. So that comes from leveraging my TFSA. So that's why I want my TFSA to be safe, because if my TFSA drops, my margin buying power drops, and most of my trades come from my margin account, of course, where I just sell options. So in my margin account, I've got some put spreads and some naked puts that are breached and tested, so it doesn't look too good. I mentioned it in my weekly recap of closed profits in my last video. But yeah, so I've got Adobe Put Spread expiring February 19. This one's okay because Adobe is at, well, let's go see what Adobe is at. I think Adobe's at 500. Yeah, right at 500. So this one's good. I mean, as long as Adobe stays above 465 by February 19, I'm good. I've got AI here. That doesn't look too good. I've got a 120 strike for January 15. So I've got 2 weeks to go. And let's see where AI is trading at. It's trading at 138, but this stock moves hard, so it could be dangerous. What else do I have here in my margin account? I've got this BABA put spread at 255. This is an old one I've had since December 1st. So I've got a 255 strike and BABA's at 232. So this put spread is completely breached on the puts, on the short strike and on the long strike. So if I do nothing, I could potentially lose $5 times 100, so $500. But I'm going to try to manage it, but I'm going to give it some time. But one way of managing it is I could sell the long put for $24, as you can see here. Use that $24 credit to roll my 255 put to a lower strike, and therefore I'll have a naked put instead on BABA instead of having a put spread. So it's going to require more capital, but at least my strike will be further and it will be easier to manage. So for example, if I collect $24, but I pay $27 to close this one, so I'm going to lose about the difference, right? So I'm going to lose about $3.70, the difference between here. So now I'm going to, if I want to turn this trade into a naked put, I'm going to go look for a BABA strike that I can sell for about $4, let's say. So I'm going to click on puts here, and I'm obviously going to have to go a bit further. So let's say I go to March. Let's say I go to March, and I want to look for a strike that has at least $4 of premiums. So you could see the 215 has 985. So I could choose the 215 if I think it's safe for all the way to March. But if I go all the way to March, I want to go lower. I want to go maybe to below 200. But hopefully the premiums are enough. So you see, I could sell the 190 strike. So I could turn this put spread into a naked put at a 190 strike for March expiration. So if I think BABA is going to be above 190 come March, then I could save this trade by doing that. Now the problem is, of course, the buying power required for holding a naked put on BABA, which I can go calculate over here, buying power. So if the stock's at 232 and I have a 132 strike, so 232 and 190 strike, sorry. So my buying power is going to be, the capital required will be 2760, which is not bad. I can afford. The problem is if BABA drops. So let's say BABA drops to 210, my capital required goes up to 4300. If it drops to 190, capital required goes to 5700. So that's what I have to keep in mind while I'm holding a naked put. All right, so going back to my positions, I've got Beyond Meat here at 115, 110, expiring February 19. It isn't doing so well. As you can see, the premiums are worth more. I'm losing a little bit. And I think Beyond Meat is trading at, I think it's in the 120s. It's trading at 125 exactly. So it's 10 points away. Hopefully it could stay above 115 by February 19. See, I've got CRM for next week, January 8th. I've got a 225 put spread. And if we look at CRM, it's already breached. So my 225 short strike is breached. So this one could be a potential loser. I'm not sure I'm going to manage it, but we'll see. I'll give it till Friday. It might come back up above 225, I hope. I don't have to do anything in that case. I've got a Corsair naked put at 30. I think Corsair is trading in at 36 about. Yeah, 36 exactly. All right, 36.22. So I have until Corsair, I think I went to February. I have until February 19, 30 strikes. So it just needs to stay above 30. And I collected $2.85. I did one contract. So that's $285. But most likely, I'm not going to hold it till February. If I can close a trade for less, let's say $2 or even $1.50, I'll get out of the trade early. Right now, as you can see, it's showing a $29 profit already. Fubo is probably the worst position I have right now. I've got 3 contracts, January 15 expiry, 30 strike, collected on average $2. But the put is trading for $5.70. So I'm losing right now $1,100 on this trade. I've got 11 days to go. And where is Fubo trading at? Fubo's trading at 28. So it breached my short strike, and it's actually right at my break-even point, which is 28, because my strike is 30. I collected $2, so 30 minus 2 is 28. So it's at my break-even. But what's important, And as you can see, it's trading for 570. So what that means is there's $3.70 of time value, of extrinsic value in this put option. Because I'm $2 in the money and the option is trading for 570. So the difference, 570 minus 2, $3.70 of extrinsic value. So what's important for me now is by January 15, Fubo comes back up above 30. If it doesn't, I'm going to have to roll it. So I'll buy back this put for a small loss or whatever, and then sell the same strike, but further, hopefully, ideally, I want to sell a lower strike. I'm going to try to sell a lower strike and a further expiry and collect a net credit. So the whole transaction gives me a credit. Hopefully, that's the plan if Fubo does not go back above 30. I've got Moderna put spread at 90.85, and Moderna keeps dropping for some reason, even if they keep coming out with good news. Where it's at 104 now, so I'm 14 points out of the money. But when I placed that put spread, it was trading at in the 120s, so it dropped a lot since I entered this trade, so that doesn't look too good. I've got charge point here, 20 put for February. I've got a lot of time and I'm pretty out of the money. If we look at where SBE is trading at, it's trading at 40, so I'm 20 points out of the money. I'm not too worried about it. It would have to drop 50% for my short put to be in trouble, right? So this one should be good. I collected $1, not much, but that's why I went so far, to make the trade safer. I did 2 contracts, so that's $100. I'll try to close it at 50 cents. I've got a Snowflake put spread, doesn't look too good either because Snowflake dropped hard on Thursday. I've got a 260 strike. I've got a January 22nd expiry, and Snowflake dropped all the way down to 281. So I'm only 20 points out of the money. When I first entered this trade, I was 40 points out of the money. So it doesn't look too good either. Not breached, but could be tested. I've got a Sumo naked put here, January 15. I've got 1 contract, sold it for $2.10. Right now it's trading for $3.30. So I'm losing $120. Got 11 days to go, and I think it's breached. So if I look up Sumo, I think it's below 30. Yeah, it's at 28.58. So I'm $1.58 in the money, and I collected $2. So it all depends what happens on January 15. I've got Wish. I did 2 contracts at a 17.5 strike. I collected $1.80. It's worth $2.50. So I'm down $140 on it. And if we look where Wish is trading at, I basically need it to be above 17.50 by February 19th. So I still have time. It's trading at 18.24. But when I entered the trade, the Wish was at $20. So it did drop a lot since I got into the trade. But that's why I went out of the money, to give me some room to be wrong and still make money. But I still have until February 19th, so I'm not too concerned. I'm just not happy about it. I've got 2 put spreads on Zoom, and they're not doing great. So this one here, 330. Zoom's at 336 right now. As you can see, I sold the put spread. See, I sold the short strike for 330. I bought the long strike for 645. And look what they're trading at right now. It's almost double. So really not doing well. So let's look where Zoom is trading at right now. It's at 337. So I've got a short strike at 330 for January 22nd. Doesn't look good. And this one, 290. I mean, it's far, but it has an expiry February 19. So hopefully Zoom doesn't keep downtrending. If it keeps downtrending, then this 290 is going to get breached for sure. And yeah, I collected $2 on that one. And what's interesting is, yeah, so as you can see, the premiums are already a little bit higher. I was actually thinking of doing this trade naked. So doing a 290 put, I would have collected around $8 or $8.50, as you can see here. And then I'd be down $150 because you can see that it's worth $10 right now. And the buying power required to hold that trade right now, Zoom's at 337. And let's say I took the 290 strike, it would require $5,000 to hold this trade naked, but I would have collected $800. And hopefully what matters is that by expiry, it's a winner. My trades for next week, I plan on selling some more put spreads, some naked puts, make some adjustments where I have to. Anything that dropped hard, I'm thinking of selling another put spread on Snow because it took a big drop. If we look at my watch list, but it doesn't, yeah, it's not updated. But anything that dropped hard, I'll try to sell a put spread on it, an out of the money put spread. So I might do something on Snow. I don't think I'll do Zoom again because I already have 2 positions in it. So I think it's enough. But I might do another one on Snowflake because it took a big drop. Fubo, I'm very tempted to sell another put on Fubo because the premiums are so high. We'll see how it reacts. Yeah, I don't think there are any good earning plays next week. So earnings date, let's say next week. We've got Micron, we've got Constellation Brands, we've got Walgreens, Boots. So this is at 40. So this, maybe I could do a naked put on this if the premiums are high. We'll see. Although healthcare is pretty dangerous, but yeah, probably not. This one, STZ, I could do a put spread if the premiums are good. And Micron, I could probably do a naked put on Micron as well. So these are probably my only potential trades in terms of earnings next week. And we'll see if anything else takes a hard drop during the week. All right, so this was my portfolio update for the week. If you have any questions, any suggestions of stocks to buy or ETFs or dividend plays, feel free to leave it in the comment section below. As you can see, I'm no expert. I just like to talk about stocks and personal finance and money. So I just like sharing what I'm doing, sharing my journey, but it doesn't mean that I'm always right at all. And I'm definitely open to suggestions. In fact, I think I did learn a lot since I started this YouTube channel from all the comments that subscribers have left or viewers have left. All right, so like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.